Stocks trade ranged ahead of inflation data in the US and the outcome of the Lok Sabha poll results in India. Realty and utilities are big drags, even as metals and FMCG eke out gains. Mid-caps are a weak spot.
A little under 5% of Inox Wins equity changes hands on likely promoter selling. Timken India too sees about 6.6% equity being sold by its parent, while PB Fintech sees over 1% being sold by Tencent, while over 3% equity is exchanged on Concord Biotech, so it's a flurry of block deals.
LIC says it may enter health insurance and go in for an acquisition in the segment if composite licenses are approved. The top life insurer says after a mixed Q4, the focus will be on top-line growth in FY25.
Nalco sees its operating margin expand sharply on lower power costs and OPEX, but NMDC sees its margin shrink on higher royalty payments and other expenses, but also hikes lump ore and fines prices.
Hello and welcome to a halftime report on CNBC TV18. I'm Ekta Batra and with me is Mangalam Malu. Well, it is turning out to be a day where we are just about marking time, you'd have to say, ahead of a whole host of events as well as data which is coming our way. So I just want to pull up for you. It will start with the US core inflation data, or the inflation data that the Fed watches very closely, the core PCE data, which will be out on the 31st of May. After that, in India on June 1st, we will have the exit polls. That will be a weekend, but nonetheless, the election verdict on the 4th of June. 5th to 7th is the RBI meet, Mangalam. 11th to 12th is the Fed meet in June. And then we have the US CPI data on the 12th of June as well. So we have a whole host of cues to watch out for, both in India and globally, over the next couple of days and weeks. So I think that will be the key focus, and the market is probably in wait and watch mode ahead of that.
Wait and watch, indeed, Ekta. You know, marking time is the word that you used, and that's exactly what's happening, especially after the big run-up that we've seen in the frontline indices as well as the mid-cap end of things. Though some bit of profit-taking is what we're seeing in the broader markets right now, down about 0.2% for the broader market index. That is the as well. That tells you that there are, you know, against the number of stocks which are advancing on both the an eye out on going forward as well, because even the last 2 or 3 trading sessions, the broader market health was split right down the middle, where there was an equal number of stocks which were advancing and declining. There wasn't really a big runaway rally, so to say. But speaking about runaway rallies, you know, let's talk about a corporate as well, which we've lined up for you. Astra Microwave Products reported a good set of numbers. The company, the revenue in the their margins, which was reflected by the change that the company saw in it, 14%, whereas there was a decline in the. So to discuss this and strategy at Astra Microwave, joining us. Thanks a lot, Atim, for joining in. You've given us guidance for the next in terms of revenue while maintaining profit margin. So this one, what will your revenue be comprised of going forward? Because at 21% that you did, 24%.
Good afternoon, and I want to start off by, thanking our mentors and partners, which is the Defense Labs, DRDO, Defense PSUs, and ISRO, without whom we would not have been where we are today. And our growth is linked to their growth. Actually, it's more our growth being linked to their growth. But when we speak of margins, the margins are effectively in line with our guidance, which is our PBT margins should be in excess of around 17%. The product mix defines our margins, and this is a multi-decadal opportunity, if I may say, with us being in a infancy state, laying the foundations for a growth. We cannot be looked at on a quarter-to-quarter margins, if I may say. So our margins will be determined more by our product mix. As you said, space, if it performs well, we get a higher margin contribution from there. If we have products which are being churned out, which have a higher component of products which are manufactured in-house, that leads to a better margin profile for us. So we are hoping and we are quite confident that we will be able to maintain the current margin profile which we have come out with.
Okay. All right. Mr. Kabra, space is around 14% of your revenue as of Q4. It's jumped significantly if you compare it to, say, Q3, where it was around 6%. What is the order book looking like for you in FY25, and how much do you think it can probably increase as a percentage of revenue?
See, if I talk about the overall order book, we are looking at a consolidated order book of about close to 2,300 crores, actually 2,299 crores as of 31st of March 2024. And the standalone order book for us was 1,956 crores, which because of a few orders which were booked in the first month itself, we have crossed 2,000 crores of order book. Space has been, I would say, we had a breakdown in a critical machine last year, as a result of which you saw the overall space revenue declining. However, the machines are back functioning, and therefore we are looking at executing on the significant order book which we have from the space business, space grade components and subsystems.
Right. That still doesn't answer our question of where you would like space to be going forward. But, we'll ask you that. In the meanwhile, I just wanted to know about your promoter holding. It's constantly been coming down from June 2021, which was a little under 9%, to September 2022, which was about 8.5%, and now it's 6.5%. You cited this to be a multi-decadal opportunity, a growth opportunity, with a promoter holding as low as 6.5%. How do you manage to, participate in that in a formidable manner?
The company was started by 3 scientists from the Defense Labs. Of these 3, 2 folks have moved, 2 people have moved out. And the only gentleman who's classified as a promoter is Mr. Chitrakar, who has the promoter holding, which you mentioned. However, if you include my holding along with the PSE being represented by Mr. Suresh Somani and Mr. Chitrakar, the three of us who are on the board alone represent more than 21% of the company as equity. So it is actually not the correct way to look at only the promoters, promoter holding classified as promoter holding. This company is being run by the board, and on the board, we represent more than 21% of the shareholders are represented.
So why wouldn't you all classify yourself as promoters as well then?
I wish I had that kind of money that I can make an open offer and get myself included as a promoter. We did debate it multiple times over, but frankly, the kind of money outlay which is required for this, we don't have that kind of money.
Okay, just want to come back to that space percentage of revenue. 14% goes to what in FY25?
I am very hesitant, and I am very hesitant to put a number out there, because the final delivery of the space components is not only in our hands, but also the tests, etc., which need to be done and the qualifications which need to be obtained. I can just tell you that...
What is the aspiration?
We would maintain somewhere around the current numbers.
Okay, all right. You also have a collaboration with a company, Teledyne E2V Hyril, and
yes.
Excuse me if I haven't pronounced that correctly. It is to provide semiconductor services support. Tell us the potential from that, considering the semiconductor industry dynamics currently.
We have zeroed in as a part of our expansion strategy on a collaborative platform model, where we would be interacting and collaborating with a lot of folks out there. Teledyne is one, as you very are well aware, is one of the big majors in the space of semiconductor chips. And what we are looking at with them is, again, a significant long-term growth opportunity, wherein MMIC chips, which are one of our core foundations around which our product capabilities have been built, are being marketed globally with their assistance. We also are looking at these further development of chips for the global markets happening with inputs coming in from Teledyne, with Teledyne being one of being the marketing arm. We are looking at scaling up our MMIC business multifolds. I cannot put a time frame onto this, but this is again going to be a long-term opportunity. As I said, we are laying the foundations for a multi-year, multi-decadal opportunity, which is gargantuan in our opinion.
All right, and final question then. Exports, close to about 30% of your FY24 sales. You cited 1,000 crore opportunity by FY28. What's the glide path towards that? What do we see exports in FY25, FY26 and FY27 as per you?
Exports will be decreasing dramatically as our domestic business picks up. As you're very well aware, the margins on these exports, which are basically built to print, they are very less. And domestic business should increase substantially. We are defocusing exports and focusing on higher margin businesses. So in our overall scheme of things, what we have mentioned is that we expect our exports to be about less than between 10 to 15% of our business going forward over the time frame which you mentioned.
Okay. All right. So we're going to let you go on that note. Thanks very much for joining in and speaking with us. So that's Astra Micro. That stock is down around 0.5% at this point in time. Well, they are bullish going into FY25. So let's see if all of that guidance comes through or not. For the mid-cap index, there's been a little worsening which has taken place in terms of the index itself. So do watch out for that. Now down almost 400 odd points at the low point of the day for the mid-cap index. Advanced decline ratio weak. But you need to put this loss in context of the gains that we've seen for the markets as well. Well, we need to take a quick break, but here's a quick note for our viewers as we do that. A daily wrap of the top headlines will hit your inbox before you call it a night with CNBC TV18's daily newsletter on LinkedIn featuring the top 10 stories on markets, corporate updates, economic insights and financial highlights. So subscribe now and get the CNBC TV18 edge. Welcome back. Well, for the markets, like we've been pointing out, there's a bit of a deceleration which has actually come in as we speak. So the mid-cap index is now showing a cut of around 452 odd points, just about a sharp fall just in the past couple of minutes, as you can see now at the low point of the day. The Bank Nifty down around 0.2%. Maybe it'll be important to just pull up the BSE small cap index as well. To see how exactly the small cap index is doing. So that too is down around 1%. It's marginally underperforming the mid cap index at this point in time. So both of them down around 1% at this point. But let's concentrate on a couple of stocks. Inox Wind is in focus after a big block deal that took place today, where around 4.8% of equity was traded. Vivek is here to tell us more about that.
Well, that's right. So Inox Wind is, slumping in the session, given the fact that you had a very large block deal that happened in this particular name. Like you mentioned, when you're looking at the total equity, almost 4.8% of the total equity changed hands via a block deal today. Sources indicate to us that it's the promoter entity named IWEL, that is Inox Wind Energy Leasing, is the entity that has gone ahead and pared their stake as far as Inox Wind is concerned. Remember, at the end of March quarter, they held close to 38.4% stake. and the total value of today's block deal would be slightly over 900 crore. Now, very interestingly, when you're looking at Inox Wind itself, there was a bit of confusion in the morning as to what exactly was the total amount of equity that changed hands. Just for some clarity, when you're talking about Inox Wind, the company had gone ahead and given a record date for the bonus issue that they had declared on May 25th. So the record date was May 25th, that was on Saturday. Remember, the company had announced a bonus in the ratio of 3:1, so 3 bonus shares for every 1 share that you held in the company. Now, what's not yet happened is the fact is that the bonus shares are not yet accounted into the investor's account. So on the back of that, there was some confusion. So simply, it's a technical factor where investors are still waiting for Inox Wind bonus shares to come into the account. But however, this is a bit slight negative the market is taking because it's the promoter entity, according to sources, that has paid a bit of stake. It'll be interesting to see who the buyers are in today's block deal.
Take that point, Vivek. Thanks a lot for that. That's Inox Wind, a flurry of block deals. In fact, Inox Wind right now down about 10%. But as we speak, we have a couple of these FMCG stocks which are doing extremely well. Tata Consumer, which was in the red for most of today's trading session, has now recovered, moved into the green. HUL too has recovered and has moved to the high point of trade. And alongside that, we're seeing a decent traction in some of the other names like Marico as well as Dabur too. Marico sitting with a gain of almost 2%, virtually at a fresh 52-week high for that stock. But in light of that, we have United Spirits, which too has seen a gain of about 2% in today's trading session, mildly off highs, but fairly off the lows as well. And that's largely because of the management commentary that came in, which was measured bullishness, if one was to describe it. Why do I call it measured bullishness? While, there is moderation in demand, largely because of the popular products and consumer wallets, which have seen a bit of a pinch in the last 2 years, we've seen premium products which continue to do well. So those trends are intact across the portfolio. In fact, the management has gone ahead and guided for double-digit volume growth, specifically in their prestige and above business, and also target double-digit volume growth or revenue growth for the full year, which will obviously be back-ended. More importantly, they haven't seen any impact on demand on account of elections. So that's something which is a positive. Commodity inflation, now that's seen a moderation, so that's good for margins. But will we see margin expansion as we did in all of last year? Perhaps not, because a lot of the cost-cutting initiatives, a lot of the initiatives that the company had done were a lot higher than what they had factored in for 1 year itself. So there would be margin expansion, but not at the same pace. And so that explains the moderation, the weakness in the lower end of the portfolio, and margin expansion, which will not be as good as the last year. And that's made brokerages, take note of that as well. While Macquarie has raised their EPS estimates by about 7% for the next couple of years, ISEC remains unchanged on their estimates and unchanged on their target of 1,200 on the stock as well. JP Morgan, on the other hand, say that the medium-term upsides for the company remain priced in at current valuations, which is why they retain underperform, and the stock, as a result of which, also seeing a moderate uptick of about 2%.
Okay, all right, Mangam. Thanks very much for that. That's on United Spirits. The stock is up around 1.5%. We'll take a short break. On the other side, Sachidanand Uttikar of Trade Bulls will join in with his technical call. Stay tuned.
It's an interesting move on the markets right now. The Nifty is just about holding into the green. It's been pretty choppy. There was a dip earlier that was bought into, and thereafter that has been sold into. We're veering around this flat line of 22,950 thereabouts, and the decline in the mid-cap index is something which is more pronounced, down about 1%. The Nifty Bank still holding for the 49,000 mark, and that's a positive. If you just take a look at the way the indices have moved ahead of the expiry, election results, and the RBI policy, as Ekta pointed out earlier as well, there has been volatility, and as a result of which the India VIX also is reflecting that volatility, now at around 24. And earlier last week it had seen some moderation to levels of 20. From there itself, it's seen a rally of almost 20%. So that's something we need to be mindful of. But the 23,000 mark has been the fulcrum for the Nifty for the last few trading sessions, and this is the straddle which is most active as well. As of now, the 23,000 call has a premium of 115 rupees, telling you yesterday's high of 2310 would be a bit of a stiff resistance on the way up for now, at least, because it was a swing high. And on the way down, though, the 23,000 put, which has a premium of 120 rupees, telling you that closer to 22,900 there would be support, and that's something that we've seen in the last couple of trading sessions itself. It's Fin Nifty options expiry today. It's just below that 22,000 mark, And the 22,000 call and put, both of them are extremely active with a straddle value of around 70, telling you again the street is working with a range of some support around current levels for the Fin Nifty and resistance upwards of 22,070 itself. A couple of stocks I'm watching out for. ABFRL may enter F&O ban. It reports its numbers today, so that's something we'll watch out for. Nalco 2, which has exited F&O ban in yesterday's trading session, will now perhaps enter F&O ban with the kind of open interest uptick that we've seen on that counter, Ekta.
Okay, all right. So that's on the entire F&O space. But Sachidanand Uttekar joins in to discuss the technicals of the market. Sachidanand, welcome to the show. Well, it's turning out to be a day where we are seeing profit booking, especially for the broader markets. What would you recommend today?
Good afternoon, Ekta. Good afternoon, Mangalam. I think clearly the market is in a consolidation mode. Yesterday we saw a very good pickup in momentum when the level of 23,100 was seen on the market. So if you look at today's range, clearly Nifty is respecting that resistance at 23,000. But on the lower side, it has a very meaningful support at 22,900. So I think near to this particular support, one should create some long positions here. The major or the primary trend for the market remains intact on the bullish side until unless it is trending above its 5-day exponential moving average support, which is currently placed somewhere close to around 22,850. So until unless we don't see a closure below this particular level, I think every decline would be a good opportunity. And from the current options data, it is evident that 22,900 support may hold on for today's session. So we are recommending building long positions here when it comes to Nifty. In a day or so, we may see the Nifty again scaling higher towards that 23,150 mark. So I think it's a healthy decline, and the decline should be utilized to create some long positions.
And individual stocks, Sachi, what would you have on your list?
Mangalam, two stock ideas. One of them we have already recommended to our clients. Dr. Reddy has been in a very good low top low bottom sequence, but recently we saw it taking a good support near its 200-day exponential moving average, and from there today we have seen a consolidation breakout. So there are signs of a reversal here. We are anticipating that this particular move may extend towards 6,100 in a day or so. So probably keeping a stop loss somewhere close to around 59.50. Long positions can still be added in Dr. Reddy. The second stock which has been on my radar is Grasim. Now, if you look at the last few trading sessions, the stock was consolidating near its 20-day exponential moving average. Even today, it has made that particular low around 2,400, and it has seen a good revival. So there is a short covering data which is unfolding, and if you look at the 60 minutes data, it looks like a triangular formation. So probably we may see this particular consolidation getting seeing an expansion move. So we may see Grasim scaling towards 25.10, and that's why we are recommending building long positions here, keeping a stop loss somewhere close to around 24.05.
Okay, all right. We're going to let you go on that note. Thanks very much for joining in and giving us all of those strategies. We need to take a short break, but before that, a small programming note for our viewers. Join us live on 31st May from 5:30 p.m. onwards for CNBC TV18's Future Female Forward, the Leadership Circle, a transformative platform where leaders from diverse fields will venture beyond the traditional discourse and share stories of grit and determination and the road less traveled. This Leadership Circle is not just about business strategies and professional accolades. It's about delving into the depths of personal journeys of these trailblazers.
Welcome back. A couple of financiers doing well. Muthoot Finance has moved to the high point of trade, even as the mid-cap index is at the low point. So pull up the intraday chart of that. We've also seen some traction come by in names like Syngene, which too has moved to the high point of trade. But otherwise, it's really more stocks declining than the number of stocks which are advancing. And in that, among the few that are gaining is Natco Pharma. Ekta, what about the numbers did the street like?
Well, yes, for Natco Pharma, highest ever revenue and profit for FY24. Numbers were higher year on year because of the Revlimid generic contribution. Numbers were below Nuvama estimates, but nonetheless, the street really liked the numbers. And I was on the conference call There was a lot of optimism on the call, Mangalam. You know, there was a lot of congratulations in terms of the numbers. What can you get to in terms of guidance? So I think the street or investors seem to be quite interested in terms of knowing what the future prospects of NATCO was, and were quite impressed with this quarter's numbers as well. So I just want to give you some details from the conference call. They have indicated that they should look at a top line growth of 15 to 20% in FY25. FY25 profit could be 20% plus. NATCO has currently around 2,000 crores plus of cash. Somebody asked on the call whether they would consider a buyback. They said they are thinking about a buyback, but they will not be able to do a buyback if in case the company considers a large acquisition, which is something that has been on the cards. They're looking at an acquisition in the rest of the world space. Revlimid generic was a good portion of their earnings. They expect they do have a tie-up with Teva even post Jan 2026, where it will become a more commoditized market. And they do, interestingly, they've said this before, but I think that enthused the markets further, is that they have first to file on specific strengths of Wegovy, which is basically Novo Nordisk's blockbuster drug when it comes to weight loss. So I think the street would be looking at that as well in terms of a key trigger going forward for NATCO. Well, those are a couple of key points with regards to NATCO. In fact, we have Vishal Manchanda, who is the pharma analyst at Systematics Group, joining in to discuss this and more. Vishal, hi, welcome to the show. Well, what did you think about the guidance provided from NATCO in terms of, FY25, 15 to 20% growth in terms of revenue, profit growth of around 20% plus?
Yeah, good afternoon, Ekta. So I think the guidance would broadly be in line what the street would be expecting from NATCO, because as we know, there is a market share ramp up that they're expecting in Revlimid in the US in FY25. So as per the settlement terms that NATCO has with the innovator, they can keep ramping up market share in Revlimid every year until they reach 33% in the final year, which is FY26. So potentially they can reach to a market share of about 22% in FY25. And I think their market share this year should be around low to mid teens. That's my estimate. So with that kind of a ramp up in Revlimid, 15-20% growth is something we can always look forward to. Potentially they can surprise too on this estimate. And again,
Right.
the profitability growth should be even higher with the top line growth at 20%. The profit growth can be even higher for them. The question is whether they can kind of replace the Revlimid opportunity with other launches. So Wegovy is one, but the patent expiry of Wegovy is not very clear when the patent expires. So there's a patent that expires in 2026 and there's a patent that expires in 2031. So the litigation would decide eventually when generics for Wegovy enter. So there's a lot of ifs and buts in NATCO going forward, how things will shape in the longer term.
Okay. That's exactly what I wanted to discuss. Wegovy FTF, first to file for NATCO. How much of an opportunity do you think it is?
So Wegovy is a very large drug. I'm not sure the peaks, but it's $5 billion plus. Around $5 billion is the peaks, is the current sales of Wegovy, and it continues to ramp up every year. So a very large drug, it's a GLP-1, and that's where there is a lot of enthusiasm across the world. GLP-1s are going to become $100 billion plus category is what the analysts are expecting. So obviously by 2031 or 2026, this would even be a larger drug when generics can enter.
Where do you stand? Go ahead.
Yeah, so a lot of money to be made here eventually, and the first to file will obviously will make a lot of money here whenever the opportunity monetizes.
Okay, and let's move on from NATCO and speak about Aurobindo Pharma as well, Vishal. Where do you stand on this? Because the street is split right down the middle. There are a couple of brokerages which are, bulls. We have Bank of America, we have Goldman Sachs. CLSA, although, has downgraded the stock to underperform. And this quarter was better than expected despite, the UGR Unit 3 disruption. So where do you stand on that?
I think UGR Unit 3 OAI is definitely a setback. It is their largest plant. They have very large dependence. While OAI doesn't really impact the business should continue as it is. Sales should should kind of continue. Only issue is Aurobindo used to be at 400 rupees at a point in time, some time back, and now it's at 1,200 plus. So we have seen a lot of run up in the stock. The most imminent trigger for the company is their PenG facility, the penicillin G facility that they are commercializing. So how large and profitable this PenG business can be for Aurobindo is something that's going to drive their near to medium term earnings. Post the PenG facility, I think the biosimilar business is what's going to drive growth for them. So both these business, there are set of uncertainties because PenG is something which is currently being imported from the China, and we don't know if China will drop prices, and maybe this can impact Aurobindo's profitability in the product. While on the biosimilars front, competition is the most important aspect. How that shapes up when Aurobindo launches their biosimilars on the market. So there are uncertainties. Valuations have kind of run up. So we don't have as much comfort as we used to have at lower levels.
Oh, okay. Any chance you've looked at Divis?
Yeah, Divis earnings were quite strong. Q4 was quite strong, above expectations. I think primarily led by their custom synthesis business. And again, custom synthesis was led by the contrast media business that they have recently initiated. So about a year since they have initiated the contrast media contract manufacturing. I think, so for the quarter, they did beat the estimates. But if you look at the full year consensus estimates, they were much lower. The challenge that Divis is facing is their generic business is not growing the way it was growing in the past. So there's a bit of struggle on the generic business. Custom synthesis business is doing well, but I think there are challenges too in the custom synthesis side. One of the large drugs that Divis is manufacturing might see patent expiry this year, and if that happens, I think the custom synthesis business growth could also get challenged. So we have a sell rating there with a price target multiple of 30 times on FY26. Our target price is about 2,600, close to that.
With nearly all the results out right now for the pharmaceutical space, anything that stood out for you in particular, and anything that disappointed you the most, if you could give us both?
I think gross margins are shaping up well across the board. So I think all companies have kind of seen an improvement in gross margins, and everybody has called out lower raw material costs helping them in the process. While the commentary around the US is similar, they say price erosion is still there, although it has stabilized. It's not getting worse. So just that the raw material thing is something that has come up positively in this quarter.
I meant stock specific. Is there any stock in particular which you had revise your estimates the most by?
I think Cipla is where we kind of have turned positive post the earnings call. So that's where I think, so our rationale for turning positive on Cipla was the announcement of a plant in China that they have started. It's a plant to manufacture Pulmicort rescues, which is a difficult to make product. I think they'll start supplying to the US, but there is also a very large opportunity in China for the same category. And it's a product very difficult to manufacture. I'm not sure whether Chinese companies can do that. There would be very limited set of companies who could do that. So I think this can open doors for Cipla in China. So that's where I think we have turned positive and are hopeful about.
Interestingly, it's not the first. Interestingly, it's not the first company that is looking to venture into China. Gland has a presence there. Cipla is looking to do that. Aurobindo also has a plant which is coming up in China. But just before we let you go, there was news about more competition in albuterol, which would impact both Lupin as well as Cipla. How significant a piece of news do you think that is? Or do you think it's factored in considering that, it's par for course?
Yeah, so albuterol is an important drug for Cipla lupin, and this additional competition is going to impact numbers. But a part of it was, I think, into the forecast because at least we have been factoring a 10 to 15% decline every year for albuterol. But if you look at Cipla, this piece of negative news was offset by a positive news. They got approval for a generic version of lanreotide. So they already have an approval for lanreotide, but the one that they have is for a NDA and not an ANDA. ANDA is basically a substitutable version of lanreotide. So I think that should help them ramp up share in this product, and it should more than offset the negative impact on albuterol. And again, this was not factored into the numbers, generic version of lanreotide.
Okay, all right. Well, more to discuss, but we've run out of time, Vishal. Thanks very much for joining in and speaking with us and giving us all of that perspective on the pharmaceutical space, which has really been the sector of the last couple of days, considering that a lot of the numbers have been bunched up. Well, we need to take a short break, more on the markets, and later we'll focus on Sumitomo Chemicals and Nalco as well. Stay tuned.
Welcome back. The Nifty briefly breached that 22,900 mark, but now is holding a little above that, 22,923. So that makes the second half of trade extremely crucial. In an otherwise wobbly screen for the mid-cap end of things, we have a couple of stocks which are doing well. So Muthoot Finance has now moved to the high point of trade. Honeywell is the other one, which has also rallied a bit. A spike is what we've seen in the last 15 minutes or so on that counter. So Muthoot Finance at the high point, Honeywell is doing well. And Sun TV yesterday was under pressure. The company not doing well when it came to its core business in the numbers, and now seems to be seeing some bit of purchase at lower levels, currently at the high point for that one too. But also another stock which is doing well, Sumitomo Chemicals, up over 5% on the back of its fourth quarter numbers. What is it that the street likes so much? Vamakshi joins in with the details. Vamakshi.
Well, absolutely. In an otherwise weak market, Sumitomo Chemical is a bright spot. The company's reported a very strong set of numbers in a quarter that was otherwise marred by several global challenges, especially for agro solutions side. Revenue is seeing an uptick of almost 3% in such a challenging environment, and this has in fact come in nearly 4% higher than what the street was expecting. EBITDA is nearly 39% higher, and net profit for the company has come in nearly 37% higher as compared to the street's expectations. The standout this time around is the gross margin. They've managed to improve by almost 1,040 basis points on a YOY basis. The gross margins now stand at 41.75%, and the management says that the improvement is largely being led by procurement efficiencies for inputs, optimum pricing strategies, as well as cost control measures on the fixed overhead side. The EBITDA margin too has seen an improvement of almost 840 basis points, and the net profit resultantly is seeing an uptick of almost 52%. The net working capital days have also managed to reduce by 33 days, and in fact in its commentary the company said that these challenges were temporary and they are expected to get resolved in the near term. They also have announced capex plans. They will be buying 2 additional land parcels, and the transfer process is currently underway and will be completed soon. Regular capex of around 70 to 75 crores is what they see per annum, and additional capex of nearly 120 crores will be made over the next 2 years for 5 products, and the revenue potential from these 5 products is expected to be anywhere between 200 to 250 crores per annum. So overall, a good set coming in from Sumitomo amid a very challenging environment, and as a result, the stock is surging in trade today.
Okay, all right. Thanks very much for that. Well, the other stock is Nalco, which is in focus. Nigel is here to tell us more.
Well, that's right. Nalco came out actually with a very good set of numbers. However, it appears there is some profit taking that's taking place on that particular counter. To run you through the numbers on the top line, that was the only miss actually in their numbers, because the alumina sales, looks like it was a little bit lower than expected. So a bit of a miss on the top line. But the EBITDA for the quarter came at its highest that we've seen all the way since March 2022. So let's run you through the numbers. It came in at more than 1,100 crores odd in terms of an EBITDA. We were working with a number of around 950 crores. What caused that? Well, if you look at the other expenditure as well as the cost of power, both of them have come down. And the cost of power coming lower when you have aluminium sales that were a little bit higher tells you that they're getting the benefit of captive coal. In fact, for the past year, the total amount of coal that they mined from captive sources is around 2 million tons approximately. Looking at the segmental breakup, well, the alumina business, which is termed as the chemicals business, well, that did much better, clocking more than 500 crores in this quarter itself, while the aluminium business was more or less flattish. Going ahead, though, things could look up for the company because aluminium prices have moved up and the cost of power could continue to remain a little bit subdued. But as I said, the stock opened up well in the green. It appears it's coming for some profit taking today. Back to you.
All right, Nigel, thanks a lot for that. So that's about Nalco. In fact, Nigel, just speak about metals. So what we'll do is take a short break, come back on the other side. We'll speak about the metals and commodity space itself. Manisha Gupta joins in with Amit Agarwal, who's the founder and executive director of Star Agri. Stay tuned. All right, the Nifty back again at 22,900 with the mid-cap index now down almost 1.2%, 100 points more than what it was, say, 15 to 20 minutes ago, with the broader markets also widening the gap between advances and declines. But that's about the equity markets. Let's talk about the commodity space. Manisha Gupta joins in, and with her is a guest. Manisha.
Thank you so much for that, Mangalam. Yes, joining me is Amit Agarwal. He's founder and executive director at Star Agri, and he joins us now. Amit, thank you so much for joining us. Agri-tech, agri-finance have been buzzwords for some time, and it becomes more so, especially when you're approaching monsoons and the Kharif sowing season. So how would you look at the market right now, and what is it that you've seen in sense of growth in the last few years when it comes to agri-finance?
So we have been growing, like 40% year on year, and our warehousing capacity have been increased up to 40 lakhs ton across the country. We have also opened our warehouses in region of Africa and MENA region. So and commodity financing is also, it has been stabilized, and it has been increasing a lot. And if you look at the crop size this year, I'm just talking about the food grains, pulses, staples, around 10 lakh crore kind of production we have. So definitely it will increase post-harvest credit as well.
Clearly. Also, Amit, you're one of the leading companies when it comes to agri-finance and collateral management, warehouses, etc. What has been the expansion last year in terms of number of farmers that you've added, or warehouses for that matter? You did tell us about expansion in India and abroad. What does it mean in sense of volume and value for you?
So volumes-wise, our current capacity in India is around 40 lakh ton, which is one of the largest warehousing capacity that we operate. We have warehouses across all 16, 17 states where the crop, is growing. All the crops are growing. And then again, since India is now becoming a food hub, so we export a lot of things from agriculture side, and we also import a lot of things like pulses from Africa. So we have expanded ourselves in Africa. So in Eastern Africa, we opened our warehouses in Uganda, Tanzania, Nigeria, Zambia, and then we also opened our warehouses in Middle East, in UAE.
Okay, so Middle East and South Africa, you're expanding out of India as well. I also want to understand on what kind of competition is that you're facing within India and outside. I mean, how are you working these numbers?
So we have been in this business from last 16 years. So we are very consistent and, increasing our volumes, year on year. So, and market is very, very large. So we don't face any kind of, competition. Our service is the best, our client is, they are supporting us from last, 15, 16 years. They are with us. They are increasing their volumes with us, from last 15, 16 years. I really want to emphasize that, we have this exchange volume have come down because of restrictions on various commodities. So demand deliveries are not happening. It was happening much 3-4 years back. But other than exchange business, it's going good.
Yes, we do know about the exchange business, and that is something that the street is really anticipating that perhaps would change as the new government comes in. But Amit, talk to us about Star Agri and your expansion plans going forward. As the new government comes in, what are you anticipating in sense of measures? There have been a lot of restrictive policies as well when it comes to essential commodities. Are you looking for all of that to change?
See, this agriculture sector is a favorite of any government sector, and they give maximum benefit to the agriculture sector. So definitely the new government will continue the same, and they will give some kind of relaxation, or you can say some kind of motivation to farmers to build alternative income. What is alternative income to farmer is like, if they build warehouse in the field, so a company like us, we can take on lease. Yeah. So today farmer, they grow the crop and they just, rush to the mandis to sell the crop. So are, really like, wishes to, farmer should behave like a trader. He should store this where the crop in the farm itself within his, warehouse. So for that, he needs, long-term loans. I think, loaning purpose, this facility from the banks will be relaxed, and farmer will get, additional loan for their, small capex to generate their, alternative income.
Amit, also, what are your expansion plans going forward now? I mean, you've been into financing, you've been into collateral and warehousing. How has that evolved in last, let's say, 5 or 10 years? And what is it that you're adding more to the business?
So currently, our asset under management from commodity side is around 16,000 crore, and 5 years back it was around 3 to 4,000 crore roughly. So going forward, I believe that this will grow up to 40,000 crore, and that we will achieve in next 3 to 4 years. And agri financing has been increasing because of data. So currently we have farm data, what farmer is growing, what kind of cash flow he will be generating in the next crop. So it's very easy to lend farmer nowadays, since we also have a NBFC called AgriWide. So we are very bullish on the agri financing, secured and agri financing.
Oh, well, and that as a sector is doing quite well as too. Amit, also, what's happening in the IPO front? I mean, that is something that you've been, that has been a conversation that has been around for some time now. Is it getting any concrete right now?
So IPO, since we have private equity investors, so it's our, responsibility to generate liquidity for them. So the now company is, growing very fast and reasonably good, and we have good numbers to to show the investors. So definitely we will have our listing soon, but it is on very initial stage. So we have got our board approval, and now we will prepare ourselves for the listing.
All right. Amit, you said it's on initial stages right now, but since you are talking within the company, any more details at this point in time that you think you can share with us on the IPO? What is the size of it? What kind of money are you looking at? When can you expect it? And also, where would you use this money that you're seeking for?
See, we will, use that money in technology. The next 10 years is is for agri tech companies. So we will be, heavily investing in technologies. Our motto is to increase farmers' profitability and productivity. So for, if you have data, so you can, advise farmers what to grow, when to grow, how can you, increase your productivity. So, and second is a crop diversification. In India, you see that, farmers, they have been growing wheat, for example, wheat instead of, any oil seed. So, but if you look at the, math, so oil seed gives maximum profitability compared to other crops. So our motto is to provide them, give them awareness about the crop diversification through technology. So, as I said, we will be investing in technology, expansion on our warehousing. Plus, we will also invest in agri financing piece. That is our NBFC.
All right. Amit, thank you so much for joining us, and congratulations on that IPO. And we hope that the date and that amount is decided pretty soon there. But with that, it's a wrap on this show on Halftime Report. Business Lunch will take all the action ahead.